ET now, and let's bring on board our experts for today. We have Jay Thakkar as well as Vijay Chopra joining us. Good morning, Vijay, as well as Jay. Thank you for joining us on ET now. Jay, I'll come first to you. Let's talk about what are your high risk and low risk ideas for the viewers today.
Hi, very good morning to you. Well, I have two buy recommendations. One is of medium risk, and that is Himadri Specialty Chemicals Limited. That is, the first buy recommendation that I have is a low risk trade. Rather, I would say is a CCL product. One can buy CCL product targeting around 350 to 400. I think that the way the stock has in fact provided a breakout from a symmetrical triangle pattern, it is a classic breakout in its wave 2 formation that we have seen. And the way the momentum indicators in fact have provided a buy crossover, the way the volumes have expanded, it clearly indicates that the stock has provided a good breakout not only for the short term but also for the medium term point of view. The move prior to this consolidation was a clear 5-wave rising structure. That is an impulsive move. Post that impulsive move, we have seen this consolidation for nearly 6 months. And in this 6 months, it formed a nice symmetrical triangular pattern, post which it provided a breakout. And now I think from here on, one can see the levels of almost 350 to 400. So I would recommend to buy CCL products. This is a low risk trading idea, and I think one can buy this with a stop loss at around 270. So that's my first buy recommendation. The second buy recommendation which I have is a medium risk idea, and that is on Ram Krishna Forging. I might have mistakenly shared it as HSCL, but that is Ram Krishna Forging. That is RK Forging. Now, if we look at the chart structure of RK Forging, RK Forge, it has provided a very nice breakout from a rectangular pattern. And the move prior to that was quite an impulsive move. That's a clear swift move that we had seen. And thereafter, the stock has provided a breakout from this rectangular pattern with a clear buy crossover in its momentum indicators, as well as clear increase in its volumes. Since past 1 quarter, if we see, the volumes have been expanding in RK Forging, and this breakout has come after a 4th wave consolidation. So 5th wave in the medium term seems to have started in RK Forge. So one can buy RK Forge, one can target around 750 in the short term, but positional point of view, one can also target around 875. One can place a stop loss at 550. So if you look at the risk reward, then it's nearly around 1:2 risk reward on RK Forging, which is quite good as far as positional idea is concerned. So that would be my medium term or medium risk idea, RK Forging, and the low risk idea was CCL products.
All right, let's go across to Vijay Chopra now. Vijay, sorry, I'm going to have to ask you to keep it a little short because we've already got several queries lined up. What are your ideas for us today?
Well, I think that there are 3 ideas I'm going to share today. My first recommendation would be a buy call on Engineers India. The stock is trading around 80 rupees, and I think that it is ripe and it can go up to 90 rupees. And there's a decent return in store. And this is a low risk idea. Engineers India, as all of us know, is a Government of India company and has a fantastic order book and is a cash rich company as well. My second recommendation would be a buy call on KRBL, which is presently trading at around 230. And I think that, we are heading into a time when we'll see some kind of inflationary pressure on even food items. And we are seeing in edible oils what has happened. In sugar, we have seen a decent run up. I think that, the rice stocks are going to be next. So KRBL seemingly looks very ripe and it's a medium risk idea. And presently at 230, it can go up to 260, 270. My final recommendation would be again a buy call on Union Bank. It's a medium to high risk call. I think that there is something which is going to come in the for the PSU banks. So presently trading at about 36, 37, it can inch up to 45, 46. So Union Bank is my recommendation. So there are some good stocks, undervalued stories which can still be picked up. And although we have seen a decent run up in mid caps, but I see a lot of opportunity in the mid cap space, although large cap space would take a breather. So be very cautious, keep on booking profits because markets are, we are not seeing an up move. We are not seeing a trigger for an up move. So internationally also, as inflation is going up, we might see interest rates hardening or some kind of an action from the central banks. So be very cautious, I would say, and be in undervalued stories and preferably commodity related companies.
Right, point taken, and that is the ideas coming in from Vijay as well. We request Jay and Vijay, both of you all, just to keep your answers very short when we are getting into the query segment, as we have a lot of viewer queries actually pouring in today. I'll start first with Mahesh Vaidyanathan on YouTube. He's asked, HCL Tech, how does it look at current levels for the longer term? He's been holding this particular counter since it has been at 800 odd levels. He believes that it's a dark horse in the IT sector. Do you concur with that view, Vijay? Does it make sense to look at HCL Tech at current valuations for the longer term?
Well, I think it's a good stock. The stock is showing some signs of consolidation, and I think that around these levels, there is the risk reward is definitely positive. And once it starts moving up and we see some kind of a breather in the market, whenever we see interest rates getting hardened or markets getting confused, so the money shifts to the conservative sectors like IT and pharma. So HCL Tech is consolidating very nicely around 900 or 900 odd levels. I think once it starts moving, it can definitely move up to 1100. So no panic at all. Just keep on hanging around, and IT should do well in the next quarter.
You mentioned one bank, Vijay. I'm coming back to you on this one. Vikram has got a question on PNB. He's already acquired the bank at levels of 54 rupees. Should he book loss or move or hold on to the stock?
Well, I think that PNB, although it is one of the largest banks, but I am not very happy, or I would say I would be skeptic on the asset quality of PNB. Over the years, quarter on quarter, we have not seen PNB giving any heartening, results, and they have not shown improvement on the asset quality. And it's been a number of years, I think so. 3 to 4 years I have been watching PNB, and it's not doing well at all. So I would prefer a Canara Bank or a Bank of Baroda or a Union Bank, as I mentioned. If you want to see on the private side, HDFC Bank, Kotak Bank are much better bets if somebody wants to make money. The idea is to make money and make money safely. It's not to punt. So PNB, I would say, is not as interesting as other banks. And there are good opportunities in the banking space as well. As I mentioned, a lot of PSBs and SBI. Why not get into an SBI rather than PNB? Because SBI is the largest bank, and I think that at these valuations looks convincing as well. So whenever you see a fall in SBI, go into an SBI. Maybe you can book loss in PNB, but you will make money elsewhere. So why to risk your capital?
Next viewer queries come from Shanmuga Sundaram, saying that he has 20 shares of GMM Pfaudler that he's purchased at 4,200 rupees per share. He wants to know whether he can continue to hold on to the stock for the next 6 months. Jay, how does the chart for GMM Pfaudler look like? Makes sense to continue to hold on to this counter over the next 6 months?
I would say for the 6 months time frame, I would not recommend to hold this stock. But for the short term, say maybe for a month or 2 months, I would say one can hold on to this stock. One can see the levels of around say 5,000 to 5,200 in the short term. I would say the way the stock has formed a nice consolidating pattern above its 200 DEMA as well as 50 DEMA. In fact, has provided a breakout out of it as well with an increase in volumes. This can take the stock to 55,000 to 5,200, say within a month or two. But for 6 months, I would not recommend to hold on. So whenever one see a bounce till 5,000 to 5,200 levels, one can take profits out of it.
Okay, Vijay, coming to you on this next one, we had the management of JSPL on the channel not too long back, and there were some interesting points being made about the selling of the power business and reduction of debt and all of that. Senthil is asking, should you invest at current levels for a period of 2 years?
Well, I think, JSPL from almost 100 rupees, we have seen almost a 500 rupees. So 500%, if some stock goes up in a year's time, I think that to be fair to the company and, we need to see the stock price coming down. although there is no problem with the company at all. They have posted blockbuster results. All the steel companies, Tata Steel, JSPL, JSW, these are great companies to have in a portfolio. But again, if you want to enter now, I would recommend that just wait for some time, let it come near maybe 350 odd levels, if at all we find it in a correction. It would be a great time to enter, 350 to 370 odd levels. You can get into the stock there and just hang around. I think that JSPL is heading far above, and we'll see this stock going to maybe 800, 900 levels if somebody holds with 2 to 3 years perspective, because I see a long-term rally in the metals. And all these top companies, whether it's Tata Steel, JSW, Jindal Steel, Jindal SAW, JSL, Hisar, all these companies are going to do fantastically well over a period of 2 to 3 years. But yes, just we are seeing some profit booking, and if you're making a fresh entry, wait for some time, and we'll find lower levels, and then I think that around as I said, 350 to 370 is a level where I think would be a great entry level to get into JSPL. So great company, great results, and I see metals doing good over a period of next 2 to 3 years.
Next query is coming in from Joby Sebastian, saying that he's holding on to Godrej Agrovet, which he purchased at 560 rupees per share. He's been holding this particular counter for a longer term. He wants to know whether he should continue to hold on to the stock or shift to another stock. Jay, what's your view coming in on Godrej Agrovet?
I think one can continue holding this stock. It's a nice stock, and technically this stock has clearly provided a breakout from a downtrend line resistance. Also, the stock has formed a nice inverse head and shoulders pattern. This stock is likely to inch towards the levels of say around 620 in the short term. Positionally, I think for the longer term rather, I would say the stock is likely to move above the levels of 700, 720.
Okay. All right, so let's take another question. Then we've got a question from Shubh Mathur coming in on EID Parry. He says that he bought he bought this at a peak of 441. He's asking if we should average or if we should wait for a few days in the hope of a better level to enter or average.
Enter it right away because the stock has corrected since past couple of trading sessions, and it has in fact provided a very nice breakout above the levels of 375. So that should be the stop loss now going forward, 375. I think the stock will bounce back anytime soon now because it had provided a breakout above 375 with an increase in volumes, and in fact entire sugar pack and in fact performed quite well and provided a breakout positional point of view. So I think with the stop loss of 375 one can enter, add on to this stock, and we can see this stock moving above 475 in the short to medium term.
Okay, the next question is the very definition of why investors should look at investing for the long term into quality stocks. We've got a question from Sagar, and this one's for you, Vijay. He's got into PGHH. This is Procter & Gamble Hygiene and Healthcare. Rather, his father bought at levels of 2,000 rupees, 5,000 shares. The stock is currently trading over 13,500 or close, in fact, to 13,600. They've been holding for nearly a decade. Should he hold on for another decade is the question.
Well, I think that, stocks like Procter & Gamble, Colgate, Gillette, these are portfolio stocks. And I think that, nothing goes wrong in them. We see the crests and troughs of the markets crashing and, people, selling the stocks in a panic. In the last 10 years, if he's holding, he must have seen at least 2-3 major crashes, and this guy has not shown any kind of a panic. So if he doesn't need money, it's a portfolio stock according to me. And, such stocks are passed from generations to generations. But, there are great opportunities coming in the market elsewhere as well. So, it would be a good idea if somebody can book half. They have been, sitting around for 10 years. So, they can get into good companies. Another recommendation I would like to make is Coromandel International. It's a, Murugappa Group company. And I see a lot of steam in the fertilizer space around the agri, as I mentioned, around the agri space. So, or a stock like Godrej Agrovet, somebody can buy into the stock and just hang around for a decade, and there is huge money to be made, as I mentioned about metals as well. So again, great. I would like to congratulate the gentleman who has held on to the stock, but if at all you see a rally, you at least book half and get into some other good story, and there would be great chances of making a good amount of money.
All right, our next query is coming in from Rajesh. This is an email query that we've got. He's saying that he's holding on to Coal India shares, which is about 1,000 shares that he bought around at 157.6 rupees per share. He wants to know what should he do with this stock. The time horizon is 6 to 1 year. Jay, 6 months to 1 year. How does the chart look for Coal India?
The way the stock has recovered recently, I think, from the 6 months point of view, I think it will 6 months to 1 year, rather, I would say it's likely to inch towards the levels of 170 to 190. So one can continue holding to this stock.
Okay, now a number of people have asked about SAIL, and I think Vijay has made his view very clear on the counter. So I want to go across to Jay. Jay, on the technicals, what are the charts indicating to you?
The way the stock has provided a breakout and the way the metal cycle has in fact reversed, I think SAIL corrections should be utilized as a buying opportunity. I would say, we have seen some profit booking from higher levels since past couple of trading sessions, I would say, and we have seen metals in fact dragging down Nifty as well. But from the short-term point of view, short to medium-term point of view, I would say that SAIL has a very good support at around 100. So 100 positionally would be a very good support for SAIL. I don't think it will break those levels. So, overlap those levels, and, we would see this stock recovery. It might consolidate for some more time. It might, correct some more from here on as well. But I don't see it going below levels of 100 from here on. So one can use this dip as a buying opportunity, accumulate this, because I think the overall, metal rally has just started. In fact, I would say from the long-term point of view, because the metal index has provided a breakout from a double bottom pattern.
Coming in from Santi Cherela, talking about Intellect Design Arena, saying that the stock is currently trading at the support level of 690 to 700 rupees price band after it's fallen from the recent highs of 850 rupees per share. So wants to know whether it's a good time to buy Intellect Design at the price points of 700 rupees per share and 650 rupees per share before we can see it climb to the recent high levels. Jed, this one is for you.
Okay, I think, overall Intellect Design seems to have run quite a lot, and I see, as far as the momentum indicators are concerned, it's looking quite overbought, and I can see some negative divergence as well out here on Intellect Design. So I would rather recommend to, book profit out of it and wait for some correction, on Intellect Design, I would say, because it seems to have completed a clear 5-wave rising structure, and the recent reversal which we have seen now on the weekly charts. If you see today is a weekly close as well, I see a clear dark cloud cover formation on this stock. In fact, on a weekly basis, the stock is down by 9% and is forming a dark cloud cover candlestick pattern. This clearly indicates that there is a very high probability of a reversal from here on, at least from the short-term point of view. And after such a strong run-up, we can see a retracement at least coming on this stock until the levels of around, say, 590 to 550 levels, which must be around, say, 10 to 15% from here on. So 15% correction further from these levels cannot be ruled out.
Okay, I'm coming to you on this next one, Vijay, and this has to do with a stock that you will probably also call a portfolio stock. This is Asian Paints, and the stock is absolutely flying in trade today. Naresh has got a question on this. He's bought 32 shares at 2,420. He's asking if we should hold on and we should book profits at this juncture.
Well, these are great companies. I was listening to Saurabh Mukherjee's one of the presentation where he said that Asian Paints is one of the companies which has consistently grown 20% over a period of last 20 years. How many companies do we have like this? So again, I think that this gentleman is a medium-term, short-term investor. So he can look at 2,800, 2,900 and then exit there. But if you ask me, Asian Paints again is a portfolio stock, and these kind of stocks should be bought into in any kind of a correction and held on to, again, passed on from generations to generations. And these are very stable companies. This doesn't matter that if even a shock like COVID could not disturb a chart like Asian Paints, and there are many such companies where they came back very very sharply. So I always say good stocks are like tennis balls and bad stocks are like eggs. So it's a great tennis ball, a portfolio tennis ball. So if at all you want to book out around 2800, 2900. Otherwise, keep on holding it in your portfolio.
All right. On that note, I'd like to thank both you, Vijay, as well as Jay for taking all the questions that you did take. And to the viewers who've tuned in and who've not got their queries answered, I'm terribly sorry for that fact. But we'll be back on Monday and we'll take more queries. We promise to take as many as we possibly can. We're slipping into a short break. We've got more on the other side, so do stay tuned.
Co-powered by LG Refrigerators. More than fresh, farm fresh.